Alright, just a quick plug for the Green Star Trading Patreon here. If you're not a member yet, consider clicking on the link in the description box below, heading over, having a read of the tiers here and signing up now. You'll be charged on a pro rata basis going forward each month. If you were to join our most popular tier, which is tier 2 here, you unlock the public Discord where there are dozens of channels for you to discuss multiple subjects with all of our members. You can ask me anything you like. There's a dedicated channel there where you can ask me questions about anything you like: market opinion, technical analysis, Elliott wave issues, previous videos, you name it. You also unlock all of my educational series, including the trading series, the 16 video strong Elliott Wave series now as well. If you go for tier 3, you get all of the benefits of tier 2, and you also get the monthly dividend calendar, stock rating system, and a video which supports that as well. One of the biggest benefits of joining tier 2 or tier 3 is the weekly live stream, which goes on for sometimes between 3 and 5 hours, and you can put in requests for the charts you want me to look at in the week prior, and I will come around and do that in the live stream. Now, if we have a quick scroll down here, you can see we've now got 187 exclusive posts on the Patreon, which can't be unlocked anywhere else. You can't see them on YouTube. The most recent one was added just a couple of days ago, which is called The Goal of Trading. Now, there's obviously an opinion piece and subjective, but I do proffer a lot of important and useful information in this, and that's the kind of thing that you're interested in. This goes into the educational series as well. And yeah, we've had a couple of live streams recently, which are all time-stamped. You can go back and watch them. We've had the dividend stocks review, picks for February 2023, the dividend calendar, stock rating system, another live stream, and we had our economic indicators for January 2023. We'll have our economic indicators video for February 2023 coming up for tier 2s and tier 3s as well soon. So there you go. Thank you very much for listening. Please consider signing up, and now let's get back to the video. Hello everybody, and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, today we're going to be looking at something a little different. We're going to be looking at another altcoin. We're going to be looking at XLM, Stellar, one of the older altcoins. We've looked at XRP on the channel before, but I don't think we've looked at XLM. Reason I'm interested is I noticed a little price move off of the low, and it's quite a compelling little impulsive move we got going on here, and it's very early days, so it could be catching this one nice and early, an opportunity here if this longer term count turns out to be correct. So I dug up a chart for it. Turns out I have got a count that I covered previously on a live stream long time ago, so I fleshed it out a bit, and it hasn't been that difficult. In fact, things have worked out really quite nicely. So I figured, well, you know, since the count actually looks quite good, we'll share it on YouTube, and we can always come back and visit this at a later date. Turns out I actually own some of it as well, and I've completely forgotten, so bonus. Maybe an opportunity to accumulate a bit more. We shall see. Right, so we're not going to go straight into the count right now, and the smaller time frame. What we're going to do is we're just going to start by just looking at the long-term price moves we've got here on the weekly time frame. Now, we are in the log scale, okay? And the first thing I want to just look at are these two corrections. Okay, because I think we can both clearly classify them as sharp corrections. Right, there is no new price extreme. A new price extreme within the section of the Elliott Wave principle which discusses alternation refers to a new price extreme as a move beyond the prior termination of the motive move. So a corrective swing in a B wave would be the most typical. For example, a flat, an expanded flat. Neither of these have that price action. They're both sharp corrections. Zigzags, well, in the family of zigzags, double zigzags in this case. They are different lengths in duration so far. This one may continue lower, it may be done, but this one is 798 days and this one is 595 days. If we look at them in price, we can see that this is a 97.19% correction and this is a 91.19% correction. So difference in severity as well. So this one is smaller in magnitude and duration to this one. So that's got us thinking already about what this could likely be. The next thing I've noticed is if we take long-term Fibonacci retracements here for a moment, and we use wave 2s. Now there's no point putting them in linear scale here because we already know this is a 97% correction, right? So we're just looking at it in log. What we see off this first one is we come to the 50% retracement. Okay, so we know that target zone for a wave 2 is 50 to the 78.2. We can go deeper, but that's the most likely area we'll fall into, with the most likely area being the 50 to the 65 the 61.865, the golden zone as we call it. So we come to the 50 and we bounce. We come back into prior demand here, okay, from this area here, and if we were to get ourselves a fixed range volume profile and run it up through this impulse here, you know, it will show us. It can't show us for some reason. We can't get no volume data. Excuse me, we can't get any volume data that early in the chart. But if we could, we would see that this was an obvious demand zone here, coming back into here, and a little bit of demand here as well that we fell back into, and we bounced off of the 50. The next one here, this goes down to the golden zone and slightly through it. Now, if we add in the 707, one of those levels that people rarely use, and I throw in occasionally, it just sometimes comes up, and it comes straight to it this time. Now, it's not a big coincidence because we've got prior highs here, prior highs here, prior highs here, prior lows here, prior highs here, prior lows here. This is a major support level. It just happens to fall onto the 707 fib as well. I mean, if we just, I think I listed that somewhere. Yeah, so here's the long-term support we can see, long-term structural support, bunch of highs and lows here, previous highs here. Right, it's obviously it's not exact, it's a straight line in what is essentially a range, but either way we come back to it and we happen to come straight to the 707 as well on the Fibonacci retracement. So we come to two target fibs. Now if we go into time targets for a moment, since I've started using Fib TIme more often again, we can see an interesting point here as well. So the target box represents the area between the 50 and the 78.6, but it also represents the area between the 1618 and the 2 times the length of the prior impulse in time. So this is 1618 the length, this is 2 times the length, or I should say the same length. In other words, we've done the same up here and the same back. So this corrective period, when we reach the 2 here in time, is the same as the length up from the low to the high. This is 61.8% of it, and we are bottomed right between the 61.8 and the 2. Okay, not right in the middle, but any of these zones are possible areas for the to find a low, with the most likely at larger wave degrees being between the 618 and the 2, and that's what we've done here. Now when we move forward in time with this move up, the length of this one here, we actually come past the 618, past the full length of it, and we come almost to the 2618, so between 1 and 1618 the length of this impulse up, which is another target zone for a larger wave correction. Now this is, we're saying, we've already spoken about the length of it and the depth of it, so we're basically saying 1212, right? Which early on in a crypto's life, this makes a lot of sense if we're going to go a lot higher. So we've come to 2 time targets and we've come to 2 fib targets. Okay, we've come to long-term support, and if we bring up a fixed range volume profile for the impulse from where we can get volume, from the 20 low to the 21 high, we see that if we were to project forward in time our point of control, and let's just put it in yellow and put dots on it to make it the exact same. Right, there's our point of control, and we've come straight to it. So we've come straight into a time target, we've come straight into a fib target, right, and we've come straight to long-term support, and we've come straight back to a point of control. I find all of that quite compelling, to be absolutely honest. It's not at all a guarantee that it's the low, but I just find it compelling. So that's got my interest. So now let's look at some geometry to fit this. And this is also quite compelling as well. So let's look at the long-term pitchfork off of this pivot here. This is our larger pivot in both time and magnitude. Okay, from the low of the low to this high swing low, we get a move straight to the 38.2. We can see how the 61.8 here was support perfectly along there. We can see how the 38.2 was perfect resistance, back test to the 38.2. We can see multiple tests around the top, around the median line. Move down to the 23.6, up to the median line for resistance, down to 23.6, up to the median line for resistance. That was the kiss goodnight. Down to the 50, 38.2, down to the 60, below the 61.8, bum, straight to the edge of a long-term pitchfork, straight to the edge of it. The edge of that pitchfork we know is a fib target and a time target and long-term support, and is also the point of control. Okay, so this is one of those instances where the technicals are king here, and are proving to be absolutely king here. Look at that kiss on that median line, for example. That's literally to the tick. So I don't know exactly which ones or who programmed them or who owns them or who they're working for, but the algos love this pitchfork on Stellar here, and they love all the other levels as well. So that could be the bottom. Now it could not be, we could come lower, but that's the best. That's a bloody good bet that that's the low. Right, and we've got a nice setup off of it. So let's now look at the next pitchfork. I want to look at is how well this move subdivides as an impulse, and it does subdivide very nicely as an impulse, and we'll look at the count in a minute. We top out right at the top of it, we fall away into a corrective move. That corrective pitchfork contains the price extremely well as well, between the 38.2, 38.2, 38.2, 38.2, now breaking out slightly into the 50. We've tested the 61.8 here before as well. So maybe we're still inside this downward pitchfork, right? So we can't run away yet with the idea that we've bottomed, because we are still in a downward trend, right? Low, high, lower, low, lower, high, lower, low, lower, high, lower, low, potentially lower, high. So really the major pivot that we want to break here, and we'll take the intraday price. We could take the close, but let's just take the intraday, intra-week, sorry, at this base, at this point, and we'll say major pivot. We'll label it here. Pivoty, major pivot. And we'll put that in yellow, bold, italic. Why not? Jazz it up a little bit. And what we'll do is we'll stick a little price label on it, 38505. So we don't really want to wait until we break that pivot. We'll be much more confident above that, but we don't want to wait till then. We've got a potential 1-2 off the low. That's what I'm saying. We've got 5 up and 3 back. We would much rather be in now than waiting until that's over with. And we, you know, there's a saying I've developed now, which I'm not sure if it's popular or not yet, but I'd rather be long and wrong with a correctly placed stop with correct margin of risk in place, so that I'm not just holding and just getting slaughtered. But I'd rather be long and wrong than miss an opportunity like this one. Okay, because if this is what it could be, it's an enormous opportunity. Right, so there's our major pivot. Now, if there's anything else I want to talk about, let's talk about the indicators before we come in then. So on the weekly time frame, we've done what I like to call a round trip, which is from oversold to overbought back to oversold. Okay, and this is how markets tend to bottom on the weekly time frame. Extreme overbought readings and bearish divergence at the high, extreme oversold readings on the weekly time frame, even deeper on this recent low around December. So we've done enough to have cycled at 2 degrees, cycle degree and primary degree. Okay, 2 round trips in this case. There's several round trips, obviously you'll see them on multiple charts. The longer and older an asset is, the more frequently you'll see them, but this is 2 round trips, and we've gone from overbought to oversold, overbought to oversold on a weekly time frame. That's how markets tend to bottom. Doesn't mean it's the exact low. We can always get bullish divergence built off a lower low. That can happen. We got some bullish, multiple weekly divergence here in the MACD. Not so much in the ABV here. This is just a true low. We saw the same here in the RSI as well. If we come to the daily time frame and have a look at the ABV, though, we find a very persistent downward trend. 1, 2, 3, 4 points of contact along here, just missing out this one here, which do seem to have broken that downward trend, bounced higher. Now, it's still early days, but we have done something in the OBV trend on lower lows and lower highs, which we haven't done in price yet, which is we've broken that. So here's that pivot. We're now back above that. So the sequence of lower lows and lower highs here in the unbalanced volume has now been broken, and so is that downward trend. That's quite a nice sign. That may well be the bottom. Okay, so we've done that as well. On the monthly time frame, looking at the MACD here for a minute, we've got these two big bullish and bearish cycles again. We've seen this in Bitcoin, okay, and we are in that cooling down phase from the bearish phase. Now we did, even before we got the cross with the average and the signal, we made lower lows in price in Stellar. So the possibility is always there to make lower lows in price and still have this thing cooling off. That can happen when we're looking at such a long time frame as a monthly time frame. But one thing it tends to be for certain, which is once this bearish phase is over, the signals cross and we start to get green on the histogram, it tends to be synonymous with the continuation of this cycle. Now, we have a little bit more price data here in XLM than we have in some more recent alts, not as much as we have in Bitcoin, but the RSI pattern and the MACD pattern is exactly the same, which I find reassuring also. So that's your gear, that's all your guff talking about classical analysis, and now let's come in and have a look at the actual count. So long time frame count. So I've already said it, haven't I, which is this is a cycle wave correction as a sharp 1 into 2. This is 1, 2, 3, 4, 5 into primary 1, W, X, and Y into primary 2. So we've gone 1, 2, 1, 2. This is 700 odd days, this is 500 odd days, this is 97% decline, this is 91% decline. They're both 2s, they're both sharps, they're both deep. Okay, I've already pointed out all of the confluence structure here for support, okay, and all the other levels. So this subdivides, to me, like I said, I haven't had time to really flesh this out, but I think this is just an A B wave triangle and an impulse down and a C into a W for a zigzag. I then think we get an A B wave flat and an impulse down for a C for a Y. That one looks really quite neat. The impulse here is not beautiful, but there's no overlaps and it subdivides, so we're cool with that. Now, log scale does skew this quite badly. That's how it looks outside the log scale. We can see that the 3s and 4s which overlap here, which is what we'd expect to see with 3s and 4s, are much bigger than they appear in log, whereas the 1 appears very extended in the in log scale. We have to remember that's not the case. So 1, 2 at intermediate degree, 1, 2 at minor degree, 1, 2 at minute degree, 3, 4 at minute degree, 3, 4 at minor degree, 3, 4 at intermediate degree, 5. So wave 3 extension into the wave 1. Now if we were to just run up a fib here for a moment from the 1, we find that the 3 at intermediate degree settles between the 131.8 and the 161.8 in log. If we turn it off of log, we can see that it's huge. It goes beyond the 423.6, which is exactly the behaviour we tend to see in crypto. Okay, exponential growth, exponential explosions. I then see an ABC into a W, an ABC into an X, and then I see a pretty extended Y wave. I have considered breaking this down into another ABC, but there does appear to be 5 pivots here. 2 major swings, 5 waves I should say. Which leads me to believe that it's just an impulse. Okay, so what I'm actually saying here is it's either an impulse down, well we didn't have an expansive flat, an expansive new price extreme to get B to get C. This doesn't look like 5. So what I've done is I've just gone 1, 2, 3, 4, 5 A, B and a smaller C here to get the Y. We could probably subdivide it differently, doesn't matter, it works. That impulse works, that impulse works, that correction works, that correction works. They come to major levels, they find support and off we go. So there's the short, there's the long term. So now let's come in and zoom in on the short term. Let's just turn it off, bring our little box over here and bring up our count off of the low, which is somewhere here. There we go. We're going to come down to the 1 hour for this. Okay. And we'll tell you what, we'll add in, since we're still adding to the chart, we'll add in a little bit of subdivision while we're here. I think that 3-4 might actually be higher. It doesn't matter, there's room there to get an impulse in without overlapping. Okay, so we don't have to be super particular, we just have to be happy with the result. So it could be 3-4 like that. Okay, could be 3 4 like this. There's a running flat 1 2 3 4 5. I think I prefer that, with a bit of a runaway in the 3, having a rather stubby little 5. ABC here, that looks like a flat, that looks like a zigzag alternation at that degree, and a breaker trend, sideways correction. So we've then got ABCW, X, ABCY down into -2. So we've gone 1, 2 at minor degree again, and then we've got all of this to lead into our primary degree going into the 3. So we've got a long way to go yet. Long way. Now the only way this could get tripped up in the short term, and I'm not 100% on this, is this is 1 and we still haven't corrected 2 yet. So what I mean is that this is 3 into A, this will be 3 into B, and this will be 5 into C, and we'll get something deeper. Now, we have corrected quite deeply in the past at wave 2s. This comes to the 50. That's not that deep, so perhaps we get that expansive move to seek out the 707, 786, 618, 89, whatever, and this turns out to be a flat. Would be very deep for a flat, but that's one way of looking at it, and I will caveat this bullish short-term count with the possibility that we do that. However, for the meantime, we have another series of corrections. I think actually it's there, sharp. I think we have another series of corrections going 1 2 1 2 1 2 again. So an extension within the 3 of the 3 of the 3 of the 3 of the 3, blah blah blah. Now, if we start to break down these levels here, 2 and 2, then this was not the case. We're not going 1 2 1 2 1 2 3 4 3 4 3 4. We are probably doing that price extreme before we come back down. But for the moment, it's looking pretty bullish. Either way, let's just zoom out for a minute and remind ourselves, before we get obsessed with the short time frame and getting a good entry, just how good an entry this is, regardless of what we're doing on a smaller time frame. Sometimes you just need to be reminded of that. Okay, there's the chart in linear. So let's not stress over entry here if we've got this to do next. That would be, so in other words, I've accumulated more of this off the back of what I've seen, and I'm perfectly happy to hold it and see what happens next. Alright then, so that is essentially it, guys. I don't think there's anything else to talk about now. Like I said, let's just put in that alternate count then on the shorter time frame here, just so we've got something else to work with. We'll throw in these two into the folder for the move off of the low. Now if that is an extension, it is going to run. So it's now or never if you want to be long. Right, that's just the way it is. You can get margin of risk here at minuet 2 as a stop, structural stop. You can go for the minute structural stop, or you can go for the minor structural stop. They all represent a percentage of risk. That's just the game. There's no risk-free trade. Between the two at the moment, that's 6%. If we come down deeper, maybe you'll get an ABC here which can shrink that down for you. So you get an ABC at this degree, we can shrink that pivot down to maybe 3.5%. Right, that's reasonable. From here to the minute degree, we're looking at almost 10%. And then from there to the minor degree, we're looking at 13%. 13% on a single trade for a stop is starting to push my risk profile in my portfolio a little too far, but it's still within, given the risk to reward here, it's still within the margin of error. It's acceptable. But you can use smaller pivots here. You'll just get kicked out and stopped out, and you'll make a loss if you're wrong. That's trading. However, if it breaks out into 3-4, 3-4, 3-4, you miss your opportunity and you've missed the bus, because it's just going to off, and then good luck getting in. Right, well, you will get an opportunity. I don't mean to sound like you won't. You will, because there's an intermediate 1 up here. Okay, so eventually you'll get 5, 1, and then come back at a larger degree, and that will be another opportunity to get back in, and that will be another opportunity for those of us who are already in to load up with more. So an extremely bullish count, I know. I don't currently have a bearish count for this. I'm not going to say there isn't one there. I'm not going to say there couldn't be or that it doesn't exist. I just haven't had time to put one together. Okay, so if we break the low, we'll add in the invalidation point as well. Let's do that before we leave. Long term, we've got these pivots are short term invalidation points of the extension. We've already just discussed those. The major one is down here. Right, so if we break this, that's invalidation, and this whole bullish interpretation is incorrect. Okay, they're like 7 cents something. 70280. There you go. That's your bullish invalidation point. Let's put that in the count move off of the low folder and lock it. And there you go. Come back below this, and we're bearish, and we've got another move down. Anything up until this point is going to get less likely the deeper we get, but we could be going 1, A, B, C. That's an option. Or we're going to extend, and it's just going to go mental. Okay. There's your opportunity. There's your different possibilities. So what I'll do for the meantime is I'll just put in orange A, B, and C as a potential pullback for a deeper wave 2, or a longer wave 2 at least in duration. So we'll do that. I'll change that to orange. Alright then guys, so there you go. We had a quick look at Stellar today, and it's looking quite nice off of the low. I could be wrong, but it looks like an opportunity to me, so we'll leave it there. Thank you very much for joining me. If you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below, and as always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated. If you're interested in joining Patreon, follow the link in the description box below, head over, have a read of the tiers, and feel free to sign up whenever you like. If you're not following me on Twitter yet, please do so. I always announce videos on Twitter once I load them up to YouTube, in case people don't get their notifications. Alright guys, take care of yourselves. I'll be back with you soon. All the best. Bye bye.